Hello and welcome to your South King County real estate update. Today is April 16th and got some interesting things to cover today. Mortgage rates have been especially interesting this week. So we'll go ahead and jump right into those slides. So, as I said, this is your South King County real estate update for April 16th. My name is Sarah Eggleston. I'm with the Stone Egg Realty team at John L. Scott. And go ahead and give you a reminder about baseball schedules. I do have a number of baseball schedules available. So if you would like a Seattle Mariners baseball schedule, go ahead and reach out to me. Let me know how to get it to you, either mailing address or we can meet up. And I'd love to provide one of these for you. And since so many things have changed schedules in the past year, they have added this QR code at the bottom. And if the schedules change, you can scan that and it'll bring up the current schedule. I also am excited to announce my hot air balloon sunset paint night. I just think this painting is adorable, and I'm really looking forward to creating my own version of it. If you'd like to sign up, I'll have the registration link available for you very soon, and I will post it on this video shortly after it's over. And if you're watching the replay of this on another platform, check below. The registration link should be there. So what happened this week? So I got some answers to some questions I had in my head this week. I had a couple properties that I was pretty curious as to what they were going to close at. Once a property goes pending, you can see the price that it was listed at when it went pending, but you're not able to see what it actually closed at until closing time. So there's been a few houses that I toured with clients a while back that have now closed. There was one that listed in Renton. This is in Renton at 300,000 K and at $300,000. And this house was insane as far as how busy it was. The listing agent said there was over 80 showings through there. There was an inspection going on while we were there, which isn't really supposed to happen, but when it's that busy, what are you going to do? And it was just nuts. And I'm talking to my clients, and I know it's going to go for a lot over list. So I was like, okay, well, what's my best guess for what this is going to go for? And I guessed 380, which honestly, I was thinking was a little silly of myself at the time, but it ended up closing for 391. So that is 130% of list price. So there's not very many $300,000 houses in the Renton area. This one definitely needed a lot of work. There was holes in the walls in some places. It was pretty beat up. So it wasn't financeable. They wanted a cash offer. So even with the cash offer stipulation, it still when they still got tons and tons of offers, and it went for 130% of list price. So looking at another price point, a couple weeks before I toured that one, we toured one in Burien with another client, and that was listed at $895, and that just closed yesterday. And I was able to see that it closed at $1,010,000, so 113% of list price. So these are two very different price points for these properties. Like, they are very different properties, and this is happening at all price points. It is getting really hard to guess what things are actually going to close for, because It's never been like this. So I just thought that was an interesting week to see the culmination of those two very different properties have a very similar story in the end. So I'll go ahead and jump back into the slides. So out of Seattle Times, this week was March U.S. home construction jumps to fastest pace since 2006. Part of this is because it's a month-over-month comparison, and in February, we had a fair amount of weather across our nation. There, like many states had really bad weather, so there was a lot of construction that didn't happen during that time that was scheduled. So that they caught up from that in March, and they had a 19% increase over February. February construction fell 11.3%. So this is like just a real quick turnaround and reversal. They got back building pretty quickly. And I did think this was interesting. A new report from mortgage giant Freddie Mac concluded that the housing market is 3.8 million single-family homes short of what's needed to meet demand, a 52% increase from a significant housing shortage in 2018. So we already had a housing shortage in 2018, and now it's 52% worse, which is just kind of mind-blowing how quickly that turned around. And last year, housing construction had risen 3.9% for the year compared to 2019. So this is definitely, we've seen building throughout 2020, in the beginning of 2021 for sure. It's nice to see that that we're getting some more units because we are a little short. But builders are experiencing increased lumber prices. They've actually tripled in the past year. And the supply chains are becoming less consistent. It takes longer to get things. Coronavirus has just caused a lot of jams in the system, and therefore prices and times are going up. And then if you break it apart by region, this was very surprising to me and somewhat concerning, but all of the rest of the country had an increase in construction, whereas the West saw a 12.6% decline in construction. And a lot of this on the West is the places where they really want to build houses. There's just not land available. So we're going to have to move out, find other land. But yeah, in the cities in Seattle and San Francisco and all of those, the areas you can build are pretty much taken. So it's just a supply thing at that point. So that brings us to our market stat minute. We did see an increase in new listings and pending listings this past week. Pretty significant increase, actually. So this is heading the right direction. We are needing that new inventory. So it is coming. I have noticed more listing alerts coming up in my email that suit the needs of specific clients and stuff. So I'm definitely seeing that increase of new listings coming to the market. Finally. And showing traffic was actually down a little bit from the previous week nationwide. But overall, we are still way above where we were last year, because last year we were all it was in lockdown. So not very many people were looking at houses because it wasn't allowed. And now this dip in showing traffic for the week, I'm sure is going to bounce back the next week. And And for mortgage rates dipped for the first time since January. So yay, we had, all last year it was mortgage rates tumbling downward, 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 downward. And then this year has been a really rough year for mortgage rates because we started so low. So we're still at absolutely historic lows. And we are at 3.13 this week for the weekly average. Or sorry, that was last week. 3.04 this week, down from 3.13 last week. This is a weekly average. So this is not your actual like on the dot mortgage rate at any one time. But it's been the biggest decline in a while. So that is really nice to see that coming back. So, but these mortgage rates are from today, snapshot of today. So 3.18 up just slightly from yesterday, but you can see we have come down quite a bit from our 360 or 365 day range here. And it is interesting that it did come down that much because we had a lot of really great news for the economy this week. There were a bunch of reports that came out that were good news, which is usually bad news for interest rates, but it kind of went the opposite direction this week. So yeah, this is the first report is the initial jobless claims. We have hit a low since the beginning of the pandemic. We have just really come way down in jobless claims. So that is a fantastic report to see. People are going back to work, and retail sales were the reports that came out really surpassed what economists thought that were going to happen. So they're kind of saying that that could be due to the stimulus checks that people received, why retail sales are doing a little bit better for the last month. And basically, this is the stimulus check may be the reason that the mortgage rates and the 10-year treasury yield did not respond in the normal way to this news. But for the 10-year treasury, you can see when the mortgage rates are related to the 10-year treasury bond. They generally historically, they follow the same general trends. So when the treasury dropped way low last year and the mortgage rates didn't follow for a while, that was it shocked a lot of people. But the mortgage rates did keep tumbling until the Q1 of this year. The two lines met up again. And then since the 10-year treasury was going up, mortgage rates ended up going up as well because they met up again. However, we can see this tick down at the very tail here. And if we look at the old trend versus the new trend, it looks like the 10-year yield is going to stay low and hopefully have this downward trend for a little bit. Mortgage rates, as I said before, fell to 3.04, and home prices are continuing to rise based on the low mortgage rates and low inventory. They don't think demand is going to slow down. But I did think was interesting. They say they track public interest for open houses and interest in people who want to sell. So you can see interest for open houses over the last 2 years. Of course, we had this little plummet here during the stay-at-home order, but as far as people nationwide going to open houses, we are ticking back up and expect that line to continue. And interest for sell my house in the last 2 years, you can see it's kind of been all over the board, but the general trend has been upward, and we're still continuing to see that. So if we look at the two lines together, we can see kind of up a little bit together, down a little bit together. For the winter, we usually see a little less activity in the winter and then pop back up in the spring. So this is exactly what we'd expect to see as far as seasonal adjusting. And I want to hear from you. Let me know what you would like to see in these updates. I want to deliver what you want to know. Be that resource for you. So let me know what you'd like to see, what classes you would like offered, whether you're interested in another buyer class or another seller class, having those offered again, or an investor class. Like, what do you want to know? Let me know, and I will set up those classes for you. If you have questions, please feel free to reach out to me. I am here for you. I really do love talking about real estate. So if you are curious about what's going on in the market in your area, I would love to have that conversation. Anyways, thank you so much for joining me for the South King County Real Estate Update for April 16th. Can't believe it's that late in the year. I will be back here next Friday at 3 p.m. and I will see you then. Have a great week.